Now, Rajesh Singh wants to know how relevant are PE and PB ratios for selecting stocks? Also, do they have the same relevance for selecting a mutual fund scheme?
For a stock, they are relevant because price earning ratio and price to book value is a critical, is something where everybody looks at. It's a valuation matrix. And but it is meaningful. It is one of the elements because if you look at just low PE ratio in an industry which is not growing very rapidly, so it's a very relative thing, and it is relative in relation to the industry. It is relative in relation to the market, and it is relative in relation to a company's own past. For example, if a company, there are many companies which were growing very fast in the past, and they were commanding a high price, uh, they had high price earning ratio. And over a period of time, they became slow businesses, not as rapidly growing businesses. They matured, and they don't justify the high price earning ratio anymore. So it is a relative thing on all these metrics. So in case of mutual fund, it could be relevant. You find these two variables for every equity fund on Value Research online website. It is a weighted average price earning and price to book value. And I think it is a rough guide to the relative valuation, nothing more. And I don't think it should be a very critical part. You should not be basing your judgment based on this only, but it gives you a rough sense that whether this fund is a value oriented or a high growth oriented fund, depending on the P and PB ratio.